Most buyers focus on saving for their down payment, but here's the truth. It's often the other costs, the hidden fees at closing, that can make or break your budget. Did you know some buyers pay only a couple $1,000s in closing costs while others pay over $15,000 for the exact same priced home? Today, I'm going to break down all the secrets lenders and sellers don't always explain, plus tips you can use to cut those costs and walk into your next home with more money left in your pocket. Hey, it's Mark here with the Hiller Group, brokered by eXp Realty. My team and I have you covered here along the beautiful Florida Panhandle, from Pensacola all the way through Panama City Beach, where our team has helped over 1,500 clients and sold over $500 million in real estate in the past 12 years alone. When you buy a home, one of the biggest surprises for many buyers is the closing costs. They're the fees and the expenses you pay on top of your down payment to finalize your purchase. Most people know that they exist, but not everyone knows what they actually cover or how much they can vary. Closing costs include all of the services and charges tied to your loan, title insurance, inspection, and government recordings. They're there to make your mortgage is properly approved, your property ownership is legally recorded, and everything with the sale is squared away. These costs typically range from about 3 to 6% of the purchase price or loan amount. That might sound small, but on a $300,000 home, that's anywhere from $9,000 to $18,000. What surprises buyers even more is how much these numbers can vary depending on where you live. State and county taxes, local rules, and even the cost of attorney or title services can make one state's average just a couple $1,000s, while another can be closer to $10,000. You'll see closing costs broken down on two important documents. First is the loan estimate, which you will get within a few days of applying for your mortgage. It's just an estimate, but it shows you where the money is going. Then, 3 days prior to closing, you're going to get the closing disclosure, which is the final record. Comparing the two carefully is important. Federal rules require that most costs can't be underestimated by more than 10%. If they are, the lender may have to cover the difference, but you'll only catch that if you're paying attention. So what's inside of these costs? You'll pay for your lender fees, for processing, loan origination, credit checks, and underwriting. You're going to pay for an appraiser to confirm the value of the home. You're going to pay for inspections that are commonly done, like WDO for wood-destroying organisms, as well as your standard home inspection. Many buyers also add mold, roof, fireplace, pool. All those types of inspections are also part of these closing costs. You'll have title search fees to make sure there are no liens or claims against the property. And title insurance is going to protect both you and the lender if something unexpected shows up later. Escrow accounts often require you to prepay a chunk of property taxes or homeowner's insurance at closing. Your county will charge you to record your deed and transfer the property into your name. And depending on your state, you may have attorney fees for closing or settlement. There are also line items that you may not expect. Flood certification, property surveys, environmental testings can show up if your property is in certain zones or if a state law requires it. If the home is part of a homeowners association, there may be transfer fees just to change the HOA records. Even little things like courier or document handling charges, wire fees, overnight delivery can end up being on your closing disclosure. Each one of these may be small, but as they all add up together, it could be a substantial amount. What many people don't realize is that some of these are negotiable, or at least flexible. Lender fees often vary by bank or credit union, so shopping around for multiple loan estimates can reveal big differences in how much you're going to pay. Some junk fees, like extra processing fee or document charges, can sometimes be reduced or waived if you ask for them to be removed. You can also negotiate with the seller for credits that can offset some of your closing costs. In fact, in certain markets, it's common for sellers to cover part of the buyer's closing costs to help get the deal done. Loan programs often allow this, though there are limits to how much the seller can actually contribute depending on the type of loan. There are also strategies buyers don't often think about. For example, the date you close matters. If you close toward the end of the month, you owe less in prepaid interest because you're only covering a few days before your first payment is due. That can save you hundreds of dollars. You can also look into local or state assistance programs. Many counties, cities, and even professions like teachers, first responders, veterans have grant programs that cover part of the closing costs. A good lender or real estate agent can point you towards those opportunities. Another detail that trips up buyers is the difference between interest rate and the APR. Two lenders might both offer a 6.5% rate, but one has an APR of 6.7 and the other has an APR of 7.1. The difference comes from the closing costs and the fees that are rolled into the calculation. That means one lender's loan might actually be more expensive over time if the rate looks the same up front. Some properties also carry hidden transfer fees written into the covenants and restrictions. These private transfer fees require that a percentage of the sale be paid at the time the home changes hands. They aren't common everywhere, but when they exist, they can be very nasty surprise if you don't read the fine print. That's another reason why reviewing your title documents very carefully matters substantially in the home buying process. There are options to reduce your upfront costs too. Some lenders will give you a credit towards closing costs if you accept a slightly higher interest rate. This lowers what you owe at the table, though it raises your payment slightly over time. Rolling some of your closing costs into your mortgage is another option. That raises your loan amount, but reduces how much cash you need up front. For first-time buyers who are cash-strapped, that trade-off can be worth it. It's also important to know what happens after closing. A lot of prepaid costs like taxes, insurance, aren't one-time bills. They are ongoing. Your escrow account will collect monthly to cover them, and they often go up year over year. Homeowners insurance can rise with inflation or after claims. Property taxes can be reassessed and increase over time. If you bought with less than 20% down, you may also have private mortgage insurance, which adds another monthly cost until you build enough equity in the home. And don't forget ongoing maintenance like roof repairs, HVAC services, appliance replacements. They don't appear on your closing disclosure, but they are some of the real costs of home ownership that buyers may overlook. Let's take a look at a quick example to see how this all plays out. Imagine you're buying a $300,000 home with 10% down. That means you're borrowing $270,000. If your closing costs average 3.5%, that's about $10,500. In that amount, you will see $500 for an appraisal, $1,200 for a title fee, $1,800 for settlement or attorney fees, $3,000 in prepaid taxes and insurance, $1,000 in lender fees, smaller other items like survey, flood cert, and courier charges. And if you negotiated $3,000 in seller credits, your out-of-pocket cost is going to drop to $7,500. Or if you rolled in $5,000 into your loan, the mortgage now could become $275,000, which bumps your monthly payment slightly, but lowers what you're going to be needing to bring to the closing table. Look, closing costs are not just a single line item. They're a collection of dozens of charges that can vary dramatically depending on your state, your lender, and your property. You may want to negotiate upfront to cover some of those costs. And understanding them lets you budget better. Ask smart questions and even lower some of the bills in some of these cases by shopping around. Always review your loan estimate and closing disclosure line by line. Compare your lenders and ask about assistance programs that are available in your area. With a little preparation, you can avoid being blindsided and feel confident when it's time to sign those closing documents. Hope you found this video helpful. Hit the like and subscribe button down below, and we'll see you on the next one.